Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the European Central Bank policy meeting to be held on October the 26th. And more importantly for you, the potential trading opportunities that are presented as a result. My name is Sasha, and I'm a financial analyst from the research department at ForTrade. I'm really pleased at the interest shown in our webinars, and thanks for your positive comments. If you have any questions, I will do my best to answer them, or please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure that you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, we would like to present our new offer that is exclusive to those watching this webinar. To use this special offer, a code will appear on your screen during the webinar, which I will repeat at the end of this webinar, that you can use to take advantage of our special offer. Be aware that this offer will expire in 24 hours and that this new offer applies to all of you, not just second-time depositors. If you make a deposit within the next 48 hours, you will receive a balance bonus. If you deposit €1,000, you will receive a 2% balance bonus. If you deposit €2,500, you will receive a 4% balance bonus. Deposit €5,000 and receive a 5% balance bonus. Deposit from €5,000 to €15,000 and your overnight interest rate will be covered for 1 month. Deposit from €15,000 to €25,000 and your overnight interest rate will be covered for 2 months. Deposit €25,000 or more and your interest rate will be covered for 3 months. You, of course, are free to use this offer however you choose. Market opportunities. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it. Market opportunities are produced by the research department on a daily basis, according to market conditions and based on historical evidence. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point, support, and resistance levels. It is important to understand that it's solely your decision whether you trade on the market opportunities or not. Here is an example of a market opportunity. You can see fundamental analysis on what's going on with the euro-dollar currency pair on the left-hand side. Below, you can see some geopolitical events that can influence the euro-dollar currency pair. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see on the screen, this shows the right moment in our estimation for you to come in and open a trading position. That's this position here, pivot point. If you want to trade during the day, then you can see here the estimated trend direction, which is down. In this case, it's important to know how to use a stop loss and take profit options. You have support and resistance levels here. At these points, you can put a stop loss and take profit. And further down, you have calculations. If you close the position using take profit, you can expect these types of profits. If the price is going against you, then you can potentially have a loss at the amount of these resistance levels here. The pivot point is the recommended price for opening a trading position. The support and resistance levels are for daily, weekly, or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. The point is that our market opportunity is a good opportunity to trade on the markets. So, what is the ECB? The European Central Bank is a central bank for the Eurozone, and it sets and implements monetary policy for the Euro area. The main objective of the ECB is to maintain price stability within the Eurozone. Like many of the major central banks, it aims to keep inflation under 2%. Mario Draghi is the governor of the European Central Bank, but the council consists of 6 members of the executive board and the governors of the national central banks of the 19 euro area countries. Monetary policy is a strategy used by a nation's central bank on the amount of money in circulation in the economy and what that money is worth. If an economy is growing too quickly and inflation is high, the central bank might try to slow down the economy by raising interest rates. Generally speaking, the rule is usually that when central banks decide to increase interest rates, it's likely that the value of the currency will increase. However, it's more complicated than that, since market expectations are as great a factor as the bank decision itself. For example, if traders expect that the ECB will increase interest rates by a percentage point, it's likely that the value of the euro will grow before the announcement. However, if the ECB announces an interest rate increase of only half a percentage point, the value of the euro might drop sharply, at least for a short period after the announcement. Speculation and expectations have a powerful effect upon the markets. You can see on the table before you how interest rates have varied over the past decade, until reaching the record lows we have today. Until recently, interest rates were one of the only tools of monetary policy used by the ECB to encourage an expansionary or restrictive economic plan. The historic lows that you can see on the table were designed to encourage the sluggish EU economies since the financial crisis. And today the economic situation in the Eurozone has improved. So what happened at the previous ECB monetary policy meeting? Well, the previous ECB monetary policy meeting was held on September the 7th, and the ECB didn't make any changes to its record low interest rate, nor were any new measures announced. But in his speech following the meeting, Mario Draghi referred to the strength of the euro without expressing concern. He also indicated that plans to scale back QE, quantitative easing, would be unveiled in October. As you can see here, this effect pushed the euro-dollar up by 1.49% before it fell back to a slight rise on the day. The Governing Council also repeated its expectation that ECB interest rates would remain at their current low levels for an extended period of time. As you probably know, there are a number of ways in which markets can be influenced to move in either direction or to remain static. The speeches of senior ECB bank officials are one of them. Also, the publication of the minutes of European Central Bank meetings can have an impact upon markets and currencies in particular. To use a recent example, once the minutes of the ECB meeting from June this year was published in early July, the euro-dollar currency pair went up by 0.3% and the euro grew in value against a basket of currencies. Minutes showed that ECB officials discussed removing the easing bias on its bond buying program before deciding not to. Minutes of meetings can reveal differences of opinion among committee members and thus give us clues as to the future direction of monetary policy measures, such as whether interest rates will rise or decrease. So what can we expect from the ECB meeting? Some ECB policymakers were reportedly concerned about the recent growth in the value of the euro against the dollar, but over the past month the euro-dollar has fallen back. However, confidence in the eurozone remains high at the moment, and analysts are not expecting any major changes in monetary policy. Interest rates are widely expected to remain at the current level of 0%. As always, nothing is certain, but traders are focusing on the expected announcement on quantitative easing rather than a highly unlikely interest rate change. What you need to know here is the slower and smaller scaling back of QE will likely have a bearish effect on the value of the euro. A shorter timetable or larger scaling back of QE will probably have a bullish effect on the euro, making it stronger relative to other currencies. Analysts are estimating a slower scaling back since EBC bank officials don't want the euro to grow in value, and thus officials might possibly extend QE until December 2018 or even later. However, if the ECB decides it wants to finish with QE before then, the value of the euro may rise sharply. Well, in case you missed our promo code during the presentation, this is your last opportunity to take advantage of our special offer, which will last 24 hours. The promo code is ECBFX. Again, we feel that it's a great option to use our special offer, either on this ECB event to trade or on a market opportunity, but the choice is yours. Of course, we at 4Trade will be following any developments that affect the markets very closely, so please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that this event will present. Until then, goodbye, and please join us again at 4Trade soon.